Hey everybody, what's up? Good morning, good morning. Sorry for the late start here. Let's get ready to get going. All right. Tapping the other DD band already on NASDAQ, it looks like in the overnight. Let's go. Oh, get the commercials here. All right, let's go. Sorry. All right, so we're looking pretty much upper DD band tap. We're still above triple B. We're going to have overshoots of pivots. Let's go. Let's go to the main camera here. Let's see what we got for SPY in the open here. Load up my... All right, let's go. We have a mean reverting on SPY. Right, a monthly hedge pressure. Let's take a look at this. Details are looking a little okay. Let's see what we got. All right, let's see. Mean reversion in the middle. Doesn't really have much power to that. Let me think I like here. NASDAQ monthly hedge, IWM monthly hedge. Be careful on SPY hedge break. We're right on the edge there. Let's see, resilience stays positive. I can look for an overshoot pivot from there back up to top. It's not really that good of a breakout day today. There is room inside of here to move. And any breakdown here obviously goes down and closes the box. So let's see what we end up getting. Where's the music here? All right. How y'all doing today? I'll take a quick little opening long off of hedge pressure. We do got to move up to there, which is pretty decent. Grab some micros here. Morning, friends. All right. So taking a look at kind of the way everything's set up here. I'm going to look just kind of in general. Hedge pressure balance is a long setup, long setup, long setup. Making sure monthly hedge pressure resiliences aren't looking too terrible. But again, like it's minus 18. So be very careful here. Pretty solid. I like it. How you guys doing today? Jim, what's up? Good morning, everybody. Gonna run the news really quick. Let's see what we got. Sorry for the late start today. Calendar today. Nothing. Earnings, everything before market open came out looking pretty good today. So nothing really weird. NASDAQ pressing through upper DD band again, second time. Let's go. All right, so let's just do QQQ DD band right now. It's gonna be right here. I got my futures account set up. I'm going to fund it today and we'll be trading on Monday. How you like that? Exciting times for us. So I'll be testing it live and then probably immediately that day in the afternoon we'll start releasing it to others. So it looks like Monday's the go. And immediately after that, we're going to start building our tools, our indicators, the automation part. Then after that, we're going to work on our getting our rhythmic connection set up. Get everything going there. You guys can do all of your futures trading, including trader funding programs in Rocket Scooter. Woo! Exciting. Sure, nothing in the way here. No gaps, nothing. Looking pretty solid. All lights are green. Bull long up. Got a hedge pressure long. We're in a mean reverting zone here. So remember, wall to middle is random. So wall, middle's kind of right here anyways at hedge pressure. So a little bit of strong pressure here. If we do push into here, DD band slipping, DD never slipping positive, then I'm pretty eager to see. Now, you open mean reversion, you tend to close mean reversion, so it's going to be like a short-lived setup. Now, an illiquidity pocket here makes it really nice and tasty. That can be very possible today. Keep in mind, Nasdaq hitting DD band is right at the top, so anything from here is kind of going to be choppy and random. We're going to see if Nasdaq breaks through. It's got hedge pressure tap. Remember, any resistance I see, I like to take profit on other trades. So I am currently on a long hedge pressure on SPY. Just a small long. Nothing big. 10 micros. Small-ish. Resting a little. Yeah, I'm keeping an eyeball on res for sure. That's going to be the kicker today. We're at the top of the box, and again, everything here is a little bit of a risk, but at risk management is good. As long as I have risk and reward, I know where I want to get out, then I'm good. Now we getting all this. Where's my drawing tool? All right, that's it. Nasdaq has kind of exhausted its move, and let's see if we break through the bands here on Nasdaq. Russell, let's see what Russell looks like. Russell just smacked down in the middle today. The BLD on Russell's pretty nice. Take a look really quick. Then we hit that DD band rejection right there on the S&P. I mean, I'm sorry, on the Nasdaq, the DD band is really tight. What's going on here? Let me close down and relog in. Oh, I'm sorry, IWM. What is wrong with me? I'm like, why is that not loading up? There we go. That's what I wanted to show. Display, turn that off, load layout. Keep a good eye on SPY here today. We're at the top of the box. Resilience is still looking all right. Not too bad yet. Not irrational. Watch out for IWM hedge break on this side here. Series action, yeah. It's limited to the upside too, right? I mean, unless there's a big break on this Friday expiration and a huge run. You know, this is Friday expiration, clearly. And this, again, the limitation of hitting DD band on Nasdaq is probably going to be a slowdown, and it's going to be hard to see Nasdaq break out through here. But then again, you know, how bullish are the bulls? Did look pretty solid on the monthly maps. So maybe not today. I'm just going to show you what BLD looks like. Open, monthly hedge pressure open. Open, monthly hedge pressure opens. That V is taking place twice. Any break above open goes to next resistance. So Russell, if Russell starts to support it, it's open. It's a big rally day today for Russell. BLDs are usually huge up days. They're supported by squeezes. The downward pressure, if it supports. Now again, it's very tight right here. Likely doesn't look like it's likely so. But BLDs have big upward pressure. That's one of the better things about BLU is just like a stable long up, right? BLDs are very violent because you have that downward pressure, and if it gets squeezed, it shoots up. So usually BLDs that break out on monthly hedge breaks are huge runners. Now we're not going to get one of those because we open above, but say if it opened through here and broke their monthly hedge, those are typically your biggest runners you'll ever have. BLDs are fun if they open below monthly. So let's keep that in mind. And BSU on Q is also upward trajectory. Got monthly hedge pressure right here supporting there. Let's go ahead and put Nasdaq monthly res below 0, regular res below 0. Not the cleanest opening setup today. BLU obviously trading from BSU from here to here. It's possible you got liquidity pockets in the way. Not a clean day. It's going to be choppy and overshoots too because they're above that triple B number, right? So it's looking solid here. SPY giving me some love. Let's go, baby. Okay, so Q's on monthly hedge. Nasdaq resilience just got a huge bump. That's pretty good. Let's see what stocks are running today. Apple, Microsoft. Good day, you guys. Let me smash that like button while you're chilling here, if you don't mind. Give us some love on the stream. Microsoft on a monthly hedge push. That's pretty good. Looking pretty big there. Any index divergence? No. So IWM down. Possible hedge breaks to the downside. Be very careful, especially losing monthly hedge pressure like we did yesterday. We didn't open below monthly hedge, which is good. The reversal signal usually is you break monthly hedge and you open below monthly hedge. Typically causes what we call a reversal signal. So we open above, which is a safety, a rescue here. So let's see what we have right now, right? Excluding monthly hedge itself, we're going to look right at Nasdaq monthly resilience is negative. SPY is positive, barely hanging in there, barely hanging in there. There's some nice good wick action there on the S&P. It's trying to hang in there right there at that hedge pressure. It's getting some bump. So we'll see how this works. Russell not looking the prettiest though. So we're gonna keep an eye out on these guys here. We're gonna still have the possible overshooting of pivots, so being very careful there on those trades. Microsoft looking clean. Some of the tech stocks looking like they're gonna move. See what Tesla's doing post earnings. Check my mail real quick. Get some information here on how to I'm super excited because as of Monday, I built a trading platform I can trade through. To me, that's a 3-year journey in the making. I'm excited. I'm so excited about it. I get to trade through my own piece of software. I am thrilled. Futures first, then we're gonna go Rhythmic next for paper trading. Then we're gonna go stocks next and multiple stock brokers. Then we're gonna go options next. Hopefully we can get everything wrapped up by Q3 for trading potential. I think rebalancing has some effect today. I wouldn't think so because the majority, I mean a little bit, but the majority of the market cap is tied up into like the big 7, right? And I think that shifting the weight of the different parts of it, let me get some exact numbers for you guys. The new rules are that no single security is going to exceed 14% of the index. The aggregate weight of the 5 largest market cap is going to be tapped at 38.5%. That's to smooth it out a little bit and keep it off of that kind of big 7 mentality or whatever, big 5 mentality. No security with the market cap outside of the largest 5 may have a final index weight of 4.4 or less of the weight of the security. First point, Microsoft and Apple are both over 12%, but nowhere near the 14% cap. Second bullet point is issue. I'm just reading that. Ideally, just like shifting, it's going to essentially not make the QQQ become bearish or bullish. It's going to, remember, the index ETFs track the index itself. And it's going to have, if the index ETF is just moved around a little bit because of the supply and demand of, let me think about how I'm going to phrase this. The answer is yes and no. Like, it's not going to cause the index to become bearish or bullish. It could cause the index to have a little bit of shifting around, but I think that people would have already anticipated that leading up to the event, knowing exactly what the new weights are, and hedge themselves into a place where it accounts for any possible shift. An example is if you change the, here we go. Take a look at SPY. Resilience is still hanging in there barely, but we're losing a little bit of SPY. So let's kind of keep your eyes up, keep your eyes open here. Not a good look today. SPY monthly hedge break if we lose. Remember, overshooting pivots are possible, so let's be very cautious here. What I think it's going to do is essentially, like, if you, an example, if you switch all the market caps overnight to a new number, and QQQ is going to gap to its new anticipated value, plus or minus the new supply and demand of QQQ, just like you gap up and down every day. All effect would immediately be realized at the open and at yesterday's close, right? So the market makers would have found the new value for it immediately based on the supply and demand of people wanting to buy or sell based on the amount of hedging. So say that you had like a basket of stocks and you hedge it with QQQ, and that your stocks are very heavily weighted in like Apple, Microsoft, whatever. And they shifted the percent of those in the index ETF to be a little bit lower. It just means you need to go wake up and buy some more. right? So each firm, each fund would go in there and buy some more, sell some more relative to what they were doing. And so it would immediately realize if you didn't already adjust, which you probably would have all throughout the week, you wouldn't want to wait till the last minute to go in there and really, I mean, you know what the numbers were going to be. So you would have probably adjusted for that before the event, right? So like example is pretend that you have the index ETF is 50% of one stock and 50% another. Imagine it's two stocks. And they shifted the weight to be 100% of one stock and 0% of another. And your basket had one of each stock, right? So now you only need half of a QQQ for every one that you had to hedge your entire position. So you'd have to go out there and just sell one to rebalance your own self. So in that rebalancing act, everybody should have accounted for it, is what I'm saying. So I don't think it creates additional sentiment. People are holding the stocks, and the QQQ is going to reflect that. What nervous day monthly hedge pressure breaks, very nervous. 3 red hedge break possibilities. Nobody go in there and sleep on this one. Is it a selling day? It's possible. Oh, we'll see. It's not looking too good. You got monthly hedge breaks across the board. That can't be the best sign in the world for the week at least. So let's take a look at the monthly map just to clear out. See what we have. Like in general, the bull side is still maintaining bullishness. The bear side is still kind of leaking away a little bit. So the market doesn't show signs of volatility over the next couple of weeks just yet, and it's pretty stable, at least on the SPY side of things. Now we are getting just a little bit of selling pressure today. But it doesn't look scary on the monthly scale, that's for sure. Nasdaq's getting a little bit of a little choppier. Down, up, down. Bear side's still kind of leaking away on Nasdaq. So I really feel like, I don't see the market pivoting to become super bearish just yet. Over the longer term, Nasdaq is still holding the fort. Doesn't mean you can't have a day or two or a week of selling after a big rally like we've had. Just make sure you guys keep your wits about you. I know that markets don't try to crash, so losing monthly hedge pressure is a big deal. One strike below 52.5 is the bail point, right? That's where I consider the overshoot no longer overshoot. So what does IWM look like? Just pretty nasty, right? SPY monthly hedge resilience is negative. Clearly, we fall through it. Yesterday, again, because you have hedge breaks, sometimes resilience will be little bit of a delayed signal, but this isn't not looking the best. We're pushing into a bear zone with the monthly hedge break. This could get really nasty really quick. It basically has one chance to try to recover. And if it doesn't, it's just going to probably chop around for a while. So I have no particular thoughts on this being bearish or not. This crashing through is going to likely be random and irrational. So Nasdaq resilience and SPY resilience still saying positive. So resilience in the half gap is still hanging in there. Just remember that, you know, greater than 10, less than negative 10 when irrational. So it could be delaying a little bit. It's still going to be choppy and volatile. But losing monthly hedge, not the best thing. Now, remember, yesterday we lost it and eventually it climbed back up. That's the overshooting pivots that you normally get from Triple B, which is one of our tools we talk about. When you're in that contango mode in VIX, when you're above this Triple B, right, this is the line we draw all month, 14.4, then the market's just going to sustain volatility and have overshooting pivots, so overshooting monthly hedge pressure. It's hard to determine if you're overshooting or crashing out, so I give it a one strike rule. So I give it a little bit of fat, trade smaller, build a position. We had a whole lesson on that. Like when you see green candles, it's not like, finally, let me take a long. It's like, I know where I want to trade. I'm going to build a longer position at a certain spot. Patient, build a position if you want to do anything. Yeah, agree. Another thing is when you open mean reversion, you tend to close mean reversion more often than not. But breaking monthly hedge, obviously these are really bad signs for today. Monthly hedge resilience is pushing lower on SPY. That's not the best sign in the world. But that straight drop on Russell just looking pretty gross today. If I'm looking for pivots on the downside for their market to have any kind of signs of pullback, there's some resistances here. There's a resistance there. So we could get some lower lows. Not the best sign in the world, though. And Nasdaq did peak out at upper DD band right at the open anyways. So kind of irrational, already kind of trading small if there is anything. Now we're starting the new hour. Let's get the new hourly candle up. Let's see if we look at here. So running into the new hour, it's the initial selling. This is the new hour now. What do we do? Now, again, you know, being inside a DD band, tapping the top, that's basically the end of the upside anyways. That's measurable. Anything else is kind of random and noisy. So I'm trading from pivot to pivot inside of here. Any lower lows, not the best sign. I kind of want this to be my benchmark of the market stabilizing. Kind of this middle of the range here. If we start falling below, it's going to get a little more brutal. MHP break is an uncommon thing. Markets don't like to lose structure, especially monthly structure. It's a very cautionary thing. I don't chase shorts on MHP breaks. I usually just get out of a long and sit out if that's the case. Like on my end, if I see something like this, I get out of the way. It is very violent and random when that happens. So Nasdaq hitting bottom redistribution zone. Keep an eye out here. This could be a pivot. Like I don't chase shorts on hedge pressure breaks. I usually chase longs on hedge pressure breaks. But to the downside, I'm more prone to just letting it fall than anything else. Yeah, once monthly res goes negative, right, the likelihood of this holding is very small. Right? So when monthly res goes negative, this usually breaks. And where does it go? Usually I trade an X resistance all the time. It's pretty common. That's what I normally would do. I don't chase shorts though. Shorts are volatile. Volatility is typically short-lived. Oh. The catalyst typically ends. Now, for NASDAQ, let's talk about that. A catalyst or an event typically ends. The event ends that day, but the pivots are still there. So the market is not catalyzing itself further or lower. You're understanding it right. The speed at which it goes, the risk interval, right? That acceleration of the move tends to play out throughout that one day, because that day is receiving the surprise. And typically at the end of the day, everybody adjusts according to that event, and then the momentum or the fire is typically put out, if that makes sense. So the pivots are still there. Let's go. Let me put this up here. So like essentially from NASDAQ, if you measure an event or a catalyst, right? That one risk interval, 100 and something points down here, whatever it ends up being, the catalyst part, which speeds up the fall, catalysts only last for a day, but the pivots are still there for the next possible day. Let's go ahead and work ourselves out a let's put together a let's do it. Let's see what we can. Let's find an anchor point, red line. Let's go through the exercise really quick. Where's your anchor point at that you found? Probably a good one right there. market. So that one already cleared out. Oops. Yeah, so let's start probably there. The impact went away. Oops. Get towards the end of the day. All right, so let's get those lines there. Oops. Okay. All right. So we've isolated impact, we've isolated run length. Let's put them side by side. You see the run length is a pivot. You see that from today? There's a pivot. The impact is right up here from that run. Risk interval on Q, 110, 15. And you can see once the impact is created, if you put this like right here, right on the anchor point, you can see that this is where speeding up happens. Like you can see how beyond this level, we were going to do this. You can see how it starts to curve and speed up faster. That's the catalyst line, right? That's the event for the day. And it's just self-catalyzing from the selling, right? Put a little line there. And then as we continue to trade throughout today, there are going to be pivots like these two things, right? You can see that the risk interval level, the impact, and the run length, they're all going to be pivots, right? Draw all the pieces here. And boy, I can't wait till all this is automated. That'll be super suave. Oops. And delete all of these parts. This is one of the best techniques we have. This is one of the older techniques that we have. Before we had any liquidity maps, any of that stuff. All we did was we had the anchor point here. I always draw this one as gray. Illiquidity pivots. They're awesome. Let's draw this as a double weighted red. And then this is how you do it. So you guys have a little video you can study from today. All the parts. Now you can see like as we're trading here, they're going to be pivots. Right? That's a pivot. The catalyst line from yesterday is a pivot. This is the DD band. Today is a pivot, but you can see that like if I go to a tick chart, you're going to see those lines are going to be like pivoting bounce points. When you see this even boom, boom, like boom, 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 boom. Pretty cool how that works, right? There's a whole technique, right, that tells you how to draw them. You're looking for on a tick chart when the volatility gets, when you're trading down and the volatility gets wider and then narrower. See how there's a like V's and then a wide V and then a smaller V? The volatility bump right here is where you're measuring to. And then once it gets smaller is where you do your anchor at. So that's the lowest low with the wider V. You're looking for like a fat W, if that makes any sense. So price is falling. Okay, this V is smaller than this V, smaller than that V, and then bigger than that V. So this being the biggest V, you're going to measure from here to there. And your run length's in the middle. So smaller V, there's your big V, there's your small V. Measure from here to there. And as long as you don't intersect, there's your red line. Got it? Feel good on this? And then that's it. So today, if we connect to that, that's a probable move, right? So the pivots are very sharp. So normally what you'll see is, well, there's a catalyst here. You can see that once you lost the catalyst level, the market sped up and got really nasty really fast, right? Anything down here is a catalyst active, catalyst active, catalyst active, no more catalyst. It's no more catalyst. But it's still an acceleration point where there's still volume, there's still pivoting action, but it's not a catalyst. Like being below or above that doesn't matter anymore. It's just a high volume pivot at that point. But you see how it, you have pivot there, pivot between those two. There's just balancing going on between those points. And that's what's cool about that process. Takes a little bit of practice to get used to it. We can teach you a couple of them. Maybe today in the Zoom calls. All right. Let's analyze what you have here. All right, let's go through the steps one at a time. SPY resilience is still hugging that zero line. We need to be above or minus 10 just to get that extra oomph to go one way or the other. It's not bullish or bearish enough to really take a lot of action here. Trying to break monthly hedge with the overshoot. Below 45.5 is the point of no return. It clearly dipped for one hot minute. If it's below it a second time, the market's going down. So let's see if the recovery does anything. Keep your fingers crossed clearly. The price lines on the chart, Sticky said, are for the index itself. I mean price lines. These right here are for the index ETF. All these lines are based on SPY. So... and then the graph below are based on the stocks in the index. Okay, so this is SPY, and then this is resilience, which is the stocks in the index, correct? Yes. Yeah, of course. Well, I'd like to give above monthly hedge. I'd like to see the market push a little higher. It'd be really good. A nice continuation through here. There's an illiquidity pocket. So if we get lucky and push through here, it's going to be one hell of a day. Now there's going to be rejection at monthly hedge pressure. Clearly that happens all the time. When you break through it, there's going to be a push from it. So we're going to hopefully see what this does. And let's analyze the resilience. Monthly hedge resilience is flat. It's not negative anymore. So let's see if that's just another overshoot, just like yesterday. But again, there's going to be volume. There's likely to be a big red candle off of that. I'm going to take a quick break, you guys. We're back in 5. So we get a nice, there's the red candles off a monthly hedge. So we get a nice little push. Hopefully we get some volume here. That'll be nice. That'll be very nice. Be nice to see this hold. I don't want to see the market turn bearish. Not yet. Those monthly maps are still looking clean. Russell still strong on the bull side over the month. Now again, that's over until between now and September. Ooh. That was quick. There's that big red candle you get off a monthly. All right. How's this going to pan out today? Half gap, and this time on half gap resilience is slightly better, but still not bullish, like super bullish or bullish enough. Are we getting that monthly hedge pressure jiggle, overshoot, or is this going to survive? If this starts going lower lows, I'm going to be very worried. Let's get a good bounce here on half gap. Markets are pretty random from here and pretty choppy. Two days in a row off of MHP. Not the best sign for the market. I'm definitely not liking this. All right. Meh. All right, I'm out. I'm done. I don't like it. Trying to build off of that, not the best sign. Monthly hedge rejection, monthly resilience less than 0. Not gonna be safe on the long side today again. So just take a stab, take a loss, and then call it a day. Not too big of a deal. Let's see. I gotta put in some work today to get my Rocket Scooter account up. All right, you guys. Irrational day. Nothing really to say from here. It's kind of a hard, choppy day. I'll probably just call it quits and let today pan out, and then I'll try to get everything figured out. For the Rocket Scooter side, let's go ahead and reconvene in about 2.5 hours. Once we do that, we'll get together and we'll have a little Zoom call. Like I said, once you break through monthly hedge pressure, it becomes irrational. And once you tap DD ban on QQ, becomes kind of random. Another day, just like yesterday, choppy and weird. Very easy to see that. I'm already trading small, already trading wide. I don't see the play I want. If we jump above monthly hedge, I might long into an end of the day squeeze. But like I said, I'm always looking to be bullish if the market is bullish and we open above monthly hedge. Breaking a second time, again, is a hint at a reversal. You know you're bearish, though, when you open below monthly hedge. If this is another down day, then I'll be excited to see Monday be another up day. So we'll see how that works. We'll see you guys later. Have a good one.